My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to make some money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Fool me once, shame on you. Fool me twice, shame on me. Fool me 11 times, well, shame on everyone. That's how I felt about President Trump's trade deal sooner than you think comments that exploded the market higher today, just when it looked a little shaky because of impeachment chatter and lack of visible progress with China. Trump makes these remarks and turns things around again. Averages bringing back up as if by magic. Dow climbing 163 points. S&P gaining 0.62%. NASDAQ surging 1.05%. After, by the way, a pretty dispiriting session yesterday. It's like no one else remembers the last dozen times this has happened. Sure, maybe this time will be different. My sources say no. Maybe the White House will get a deal to end all deal with the Chinese and the global economy will snap back into shape. My sources say don't believe it. Maybe as Speaker Nancy Pelosi begins the long process of impeaching President Trump, she's also working behind the scenes to pass the new trade deal Trump negotiated with Mexico and Canada. Raises eyebrows. Yeah, and maybe the tooth fairy's ready to shove some Bitcoin under the pillow of every kid who loses a tooth. Maybe Jewel is deeply committed to stopping those same kids from getting hooked on vaping. Maybe the earth is flat. Who can say? At times like these, I like to look for totems, for things to hang my hat on, so I can go about the process of picking stocks without being held hostage to the on-again, off-again trade talks with China. Because waiting for a trade deal feels like a little like kind of waiting for Godot. That's not a stock, it's a play. There's nothing to hang your hat on with this trade war. Remember when the Chinese lobbed that bomb at our negotiators when they hastily canceled a huge trip to Montana last week? It crushed the stock market on Friday. Only it turned out we were the ones who put the kibosh on the goodwill mission. Things are so disorganized and hapless that Wall Street thought an official government spokesperson was furious at China for the cancellation. But in reality, this person was a low-level PR flack for the agriculture industry. To be fair, the Montana Farm Bureau Federation, the source of the news, sounds semi-official, doesn't it? And it's not like the media and the stock market were alone in being fooled. Even the president seemed to believe the Chinese canceled the trip on their own until Treasury Secretary Steve Mnuchin disabused them of that notion and said, hey, what really happened in a very awkward press conference was we canceled it. Trying to game the negotiations is a mug's game. So how do you immunize your portfolio against all this craziness? Okay, I've been trying to find companies that have nothing to do with trade in the hope that their stocks won't be hurt badly if we learn that there is no deal and we have a connection to a flagging global commerce section. We don't want that. No, we don't want to buy a stock, no deal. Economy slows. We get killed. But you know what I realized? I realized that was the wrong approach. I'm not doing it right. Now I've come up with a new paradigm. I'm working backwards. What do? First, you figure out the worst-case scenario for trade, and then you see who's managed to tame the beast. As it turns out, well, you don't have to look very far because the situation I'm describing is basically Nike. Think about it. Thanks to the trade war, we know that, in theory, this should be the worst possible moment to sell iconic American brands into the People's Republic of China. We know that tariffs on goods made in China are hurting margins for many companies. We know that the consumer worldwide is in worse shape than last year, doesn't necessarily want to spend a lot of money on footwear. You think Nike would bear the weak brunt of this weakness, wouldn't you? Not only do they rely heavily on China for manufacturing, it's also one of the largest end markets, and a cash-strapped consumer is the last thing that you want to have to sell into. Yet Nike managed to run the gauntlet yesterday, and they did it with style. Last night, the company reported, and we learned that rather than being the most vulnerable to the trade war, Nike's actually the most in control of its own destiny. And that's why the stock rallied $3 and change today. On the conference call, we learned some truly amazing things in this Mark Parker-derived, his CEO, clinic that really just kind of blew me away. At one point, Parker noted, as I said before, Nike is the brand of China for China, and the results continue to prove it out. We've driven double-digit growth in Greater China every quarter for more than 5 years, end quote. Wow. And nothing has derailed this story. Nike's Greater China sales were up 27% on currency-neutral basis. Sometimes I say, I wish I could make that even. I wish you knew how spectacular that is. But how about this, the tariffs? The handle with a plum. CFO Andrew Campion pointed out that the current quarter will be the peak for tariff impact. After that, because Nike has so many levers it can pull, things should get better and better with each quarter. In other words, they have the scale to be able to overpower this. So they have the tariff situation quantified, dealt with. I'm not worried. You'd expect a cash-strapped consumer to weigh on Nike pricing, but that didn't happen either. In fact, we saw just the opposite, with some significant gross margin increases and much lower gross margins than I expected. Excuse me, almost had to drink some Pepto-Bismol. But for the first time in this week, my stomach didn't hurt. How the heck did they even pull off any of this stuff, really? Now you get into the core of what allows Nike to thrive in this environment, regardless of how the trade negotiations are going. First, there's innovation. There's the Joyride. That's a running shoe designed to encourage more everyday athletes to get moving. Then there's the new basketball shoes, the Zoom Freak, and the Alpha Dunk, not to mention the comfortably cushioned Air Max 200. Second, Nike's also freshening up old favorites like the venerable Jordan brand. Now, here's one. Can you believe Jordan's actually accelerated this quarter with healthy double-digit growth across all geographies, including mid-teens growth in North America? Michael Jordan, he retired for the third and final time way back in 2003. You know what? That many of the Jordan wearers, they weren't even alive when this guy was playing. Third, as Matt Boss, the brilliant J.P. Morgan retail analyst, points out, Nike has best-in-class digital marketing scale and segmentation. They're the class of the business. Oh, on the conference call, we saw how each of these pays off. Nike's killing it in digital. It's up 42%. They're making more money selling direct to the consumer than they do selling to wholesalers. Their inventories are lean with just enough product to sate Chinese demand on Singles Day, my favorite holiday. That's on November 11th, where for no reason whatsoever, you buy things for people. Nike's biggest inventory problem, they don't have enough markdown merchandise to fill their factory outlet stores. High-quality problem. When it comes to knowing their customer, Nike recently bought a little company called Select, which they mentioned several times on the call. Here's how the CFO, Andrew Campion, explained it. Quote, Select's team and proprietary digital demand sensing tools will help us more effectively predict demand, plan supply, and sharpen our pricing and markdown cadence, end quote. That's incredible. Boy, have we come a long way from the old days when my dad had to watch the now-defunct Gimbel's department store close his wing of the floor for a day just so he could count the number of unsold gabardine trousers. Frankly, Nike's got so much going for it here that I really don't have the time to list all the positives. I got a whole lot of the rest of the show to do. But here's how Campion sums it up. Quote, despite increasingly dynamic and somewhat unpredictable macro and geopolitical factors, consumer sentiment and affinity for the Nike brand remains strong and consistent, end quote. Booyah! Here's the bottom line. At a time when so many companies are wringing their hands and making excuses for all the obstacles in front of them, look for the winners who seem to thrive on these challenges. Companies like Nike, they don't complain about how the environment's making it tough for them to deliver. You know what? They just do it. Andrew in Alabama. Andrew.
Jim, hope you're having a booyah of a day.
This is one of the best booyah days in ages, although the traffic's really bad here. And I was 40 minutes late to a lunch today. I almost slit my throat. What's up?
I wanted to discuss U.S. Steel stock. I don't think the company's diamond is known through all the birth parts of the company. Here in Alabama, they have a real estate arm called USS Realty. To give you a little history lesson, it still holds a tremendous amount of land they had from the old TCI acquisition over 100 years ago. And USS Realty has a take-care approach to develop, and they've developed at least 6 new low-reach master plan communities here in Alabama, and they have thousands of raw acreage shovel-ready along the I-20 corridor just outside Birmingham.
Right. And I know the plant, and I've been there, actually, but I've got to tell you this. There's other places away from there that aren't doing that well. I don't care for the balance sheet, and if you can't make money in the steel business right now, well, you ain't going to make it. So I think letter X is a nay, and I think Nucor is a yay. But remember, The steel business is awfully hard in a global slowdown. Sam in Connecticut. Sam!
Hey, Jim, Sam Lyman. What are your thoughts on Match Group with the FTC lawsuit on Match.com's ad practices?
I don't care I don't care enough about that. What I do care about is Facebook coming in. I think Facebook is a level where it should be bought. I told members of the ActionAlertsPlus.com club that it's almost time to pull the trigger. I think I might have been too chary. Let's go to Aram in New York. Aram.
Hi, Jim Cramer. Huge fan. Love your show.
Thank you.
I have a question about Funko, FNKO.
Mm-hmm.
We had the CEO on in May. That's when I bought the stock. And I was just wondering, and recently he just sold 4 million shares let out into the market. So I was just wondering what your take is on that whole situation.
He killed the stock with an insider sale. He just crushed it. The stock has been going down pretty much ever since he did that. And you know what? It's made me gun shy. Candidly, I'm gun shy. Hey, how about Randy in Vermont, please? Randy.
Hi, Jim. How are you?
I'm not bad. How about you?
Pretty good. Autumn is starting here in Vermont. Hey, I started a position in Lockheed Martin in 2004 and sold half positions at 100, 200, and 300% gains.
Wow.
As it now approaches a 400% gain, I still like most of the fundamentals. So at what point should I decide to hold all the shares and simply enjoy the dividend?
You should hold all the shares and simply enjoy the dividend because you are playing with the house's money, my friend, with a very good stock of a very good company. You did it. You did exactly what I say you can do. And by the way, didn't you do better than your mutual fund or your S&P fund? Hey, I'm not against index funds, but how about when smart people make real money? What do you think when that happens? Thank you very much. In an environment like this one, you need to create the worst possible scenario for trade, and then you see who managed to tame the beast. And the answer, Nike. Just do it. On Mad Money Tonight. Is it time to give Whirlpool a whirl? The stock just got hit with a downgrade. Is it the spin cycle, or could the stock soon be headed higher? I'm going off the charts to see what they're signaling. Plus, a company allowing grocery stores to extend the shelf life of produce 2 to 3 times longer. But first, tech innovator Twilio has had a tough couple of months, hasn't it? Down more than 25%. Sit down with the CEO, find out whether the drop is a buying opportunity or not. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.